A sitting United States president announces that he wants to buy a massive frozen landmass, and what does the market do? It completely loses its mind. Retail day traders, sensing the geopolitical deal of the century, start throwing money at anything with a pulse in the Arctic. The shares in Copenhagen listed Grønlandsbanken, Greenland's biggest bank, jumped around 40% at the start of January. Meanwhile, US-listed Critical Metals, a company digging across South Greenland for rare metals, has climbed 55% this year and jumped around 470% last October. It's almost like a classic retail-driven meme stock frenzy. The prevailing narrative being sold to the public right now is incredibly compelling. The Financial Times notes that Greenland has pitched itself as a Western mining alternative for many rare earths and minerals, a sector that China dominates. The expectation is that Greenland is a geopolitical treasure chest. It is supposedly an untapped vault of critical materials that will finally break the supply chain monopoly of the East and secure Western defense production.
It's one of the largest rare earth deposits in the world. It also provides direct shipping access to the North Atlantic Ocean.
We need Greenland from a national security situation.
New this morning, President Trump just said the United States needs Greenland and that anything less than total control is unacceptable.
Reality is much colder. This island might not be a treasure chest after all, or at least the treasure is incredibly hard to extract. One thing is for sure, it is a highly effective, naturally refrigerated graveyard for institutional capital. If you want to know what actually happens when smart money tries to dig in the ice, you should probably listen to the people who have already tried. The Financial Times quotes Rio Tinto chief executive Jakob Stausholm directly, stating, quote, "We have looked at Greenland. We have been exploring it for 15 years. We have never been able to come up with a profitable project. 15 years of digging and 0 profitable projects. Let that sink in. That has been the reality of Arctic extraction." Throwing money at a Greenland mining operation is like trying to build a data center on the moon. Not saying they aren't trying that too. Decades of hype, political posturing, and endless geological surveys, Greenland currently has exactly 2 open mines. 2. One of them produces anorthosite, which is mostly used in fiberglass, and it is entirely loss-making. The other one is a gold mine. The lack of mines in Greenland is not due to a lack of trying. The Economist points out that during the 20th century, no fewer than 18 mines shut down, often because of high costs or logistical problems. There are currently 137 active mineral-related licenses for companies operating in Greenland. These are mostly exploration licenses for companies to try and find potential mining spots. The number has gone up over the last few years because of the hype surrounding Greenland. But even still, the number has been close to 100 for at least 15 years now. And after all this, the 2 mines remain. The people wanting to invest into Greenland are not entering a frontier economy, but one with almost no infrastructure and a track record of failed mining projects. And the ground itself is actively fighting you. As temperatures shift, the permafrost is melting. The Economist highlights a catastrophic reality check from a similar environment in Russia, where a massive diesel tank owned by Norilsk Nickel collapsed simply because the ground beneath it gave way. It released 21,000 tons of fuel. The earth literally swallowed a diesel tank whole. Yet, the hype machine is in absolute overdrive. People are dumping their retirement savings into Arctic exploration penny stocks because they somehow believe a presidential mandate magically melts permafrost and builds supply chains out of thin air. We are going to use the data reported by The Economist, Reuters, and the Financial Times to break down the 3 structural reasons why this engineered gold rush might end in tears. We will look at the physical infrastructure problem, the financial disaster of sovereign subsidies, and the local political revolt currently tearing through the island's capital. If the smartest, best capitalized mining conglomerates in the world walked away empty-handed after over a decade of trying, why is all the money suddenly rushing in? Let us call this the iceberg illusion. The core problem with the Arctic is not finding the minerals, but rather getting them out of the ground and onto a ship without completely bankrupting your company. The Financial Times reports that Greenland has more than 60 settlements for its 57,000 people, but here's the kicker. No 2 of those 60 settlements are joined by road. Not a single one. I mean, think about that for a second. You're not just building a mine, you're building an entire national highway system, alongside all the other infrastructure from scratch just to move dirt. The logistics completely break the underlying business model. Yet, the retail traders seem to be completely blind to the catastrophic capital expenditures required just to pour concrete in the Arctic. Paul Gibbs, chair of global business development at Bechtel, told the Financial Times that building infrastructure in extreme and remote cold climates requires careful design and selection of materials, appropriate and seasonal construction execution methods, and thoughtful logistics to ensure confident delivery. Let me translate that for you. That is polite corporate speak for lighting shareholder cash on a massive, uncontrollable fire. You are paying an enormous premium just so your equipment does not freeze solid and shatter in the dark. If you buy shares in a Greenland mining operation today, you are not actually paying for rare earth extraction. You are personally financing a sovereign nation's missing infrastructure. You have to build the roads, the housing, and the deep water ports just to get to the starting line. This isn't to say that it isn't possible, just that it is much harder than the discourse might have you believe. But the physical infrastructure is just a visible part of the iceberg, especially if you consider the US taking over Greenland as part of this master plan. The real nightmare, the truly devastating financial trap of this entire situation, is the sovereign balance sheet the United States would inherit if the takeover of Greenland actually happened. Let us look at the actual math of Greenland's economy, because it is legitimately terrifying. You are not buying a self-sustaining enterprise. You are buying a financial black hole. The Economist points out that Denmark currently dumps $700 million a year into the territory just to keep the lights on. That is a sovereign subsidy equal to roughly 20% of Greenland's gross domestic product. 20%. Imagine running a legacy business where a fifth of your revenue is just your parent company paying your operating expenses. It is completely unsustainable. 3/4 of the population effectively relies on the state just to survive now. The institutional politicians will pivot. They will tell you that the balance sheet does not matter because this is a macro play about national security. The prevailing argument is that the United States absolutely needs Greenland to fend off Russian and Chinese fleets. It sounds great in a press conference, but it might be a smokescreen, as The Economist notes that at least for now, Chinese and Russian naval vessels are far more active in the Bering Sea near Alaska, not the Greenland Gap. However, this could change, especially if China pursues its Arctic Silk Road goal. Still, it must be considered if the national security argument might be a manufactured excuse for a real estate vanity project. So what is the actual capital expenditure for this geopolitical flex? We are not just talking about the initial purchase price, we are talking about the long-term carrying cost. I want to give you the exact estimates from The Economist. Building and maintaining 5 military bases would cost $20 billion to $30 billion, plus another $10 billion in welfare liabilities over the next 30 years. Buying Greenland is like acquiring a wildly expensive, bankrupt subsidiary that requires a $30 billion capital injection just to keep the roof from caving in, and the local board of directors still hates you. So put yourself in their shoes. You have a functionally insolvent island running almost entirely on foreign welfare, staring down the barrel of a massive infrastructure deficit. You would think they would be begging for American hedge fund dollars and private equity bailouts, right? Instead, they are actively writing emergency legislation to keep the money out. The panic on the ground in the capital city of Nuuk is palpable. Reuters reported that early last year, a sudden surge in property interest from United States buyers hit the capital. Real estate firms and lawyers were suddenly fielding multiple inquiries from aggressive American money trying to buy up whatever they could find. This did not trigger a massive economic celebration. It triggered total, absolute paranoia. Lawmakers immediately moved to rush a foreign investment screening law through parliament just to stop the bleeding. Think about the irony of this situation. You have an island that is absolutely desperate to mine its resources, so it can finally declare financial independence from Denmark. And what do they do the second the cash arrives? They write emergency legislation to block the exact American capital that was supposed to liberate them. The political instability alone is enough to kill any massive infrastructure project. Greenland's mining minister, Naja Nathanielsen, explicitly warned about this chaotic dynamic. She told the Financial Times that the takeover rhetoric would be, and I quote, devastating for our mineral sector because investors do not like instability. It turns out that treating a sovereign territory like a distressed commercial real estate acquisition does not exactly scream stable business environment. The Arctic Dream sounds like a great deal, but it has issues written all over it. The sheer volume of capital required to overcome the violent climate, The absolute lack of connecting roads and the openly hostile local politics completely defies financial gravity. The smart money looked at the math and left the ice years ago. Now the rest are blindly rushing in, only to find out they might get frozen out. What do you think of the situation? Do you think there is still some hope left for the new mining projects? Or maybe you believe this is all a geopolitical stunt? Please share your insights below. If you enjoyed this video, be sure to subscribe and go check this one out next. Thank you so much for watching.